Good afternoon. So there's two things I want to put on the table here before I launch. Number one, I think the presentations today were great, and some of the key themes you heard in the opening keynotes, you're going to see them reiterated in this presentation. And number two, I teach an MBA class at the Ohio State University based on the books that I've written. And this session is going to be like an accelerated MBA class on how to build, scale, customer-centric organizations. Are you ready? Okay, what am I going to cover? Customer-centric organizations. Why now? What do they do? How are we going to fund them? And what are they going to look like? And before I launch, for those of you who don't know TSIA, we are a for-profit research institute. We do a lot of deep operational benchmarking with our member companies. And so it's that data vault that informs the frameworks that I'm going to share here. So what that means basically is I'm just not making this shit up, okay? It's data-driven. So customer-centric organizations, why now? Because hasn't this always been true? Think about companies that sell technology for a living. Hasn't the customer always been at the center? I mean, without customers, you can't pay the bills, right? Well, I have been in tech for over 20 years, and I will tell you that honestly, sadly, it's not true. It's not true. Why? It's the economics. It's how we make money. So we wrote a book called Consumption Economics, and we said, look, traditionally when we would sell technology as an asset, how did that happen? You had a salesperson, if you can back up on the clicker one, please. Thank you. If you had a salesperson that would convince the customer, hey, this is going to be great, this product's awesome, it's going to rock your world, save you all kind of money, and the customer writes this really big check, and they buy this asset, and we took all the money right off the table. And then we'd sell them some professional services to implement and integrate, and then the customer needed what? An insurance policy, which is this beautiful thing called maintenance. Beautiful, right? And switching costs were very high, a lot of complexity. The customer owns this asset. So that allowed us to be a little squishy around adoption, right? To be a little loose about did they really get the ROI? But that's different now. We are in this subscription economy. And what happens? The customer doesn't write a big check. They write a little check, maybe no check if you have a freemium model. And the customer says, I only want to pay for what I'm really using. So we have to make sure now they adopt. Hey, for the back there, the slides are automatically going forward. Can you please turn off the auto timer? So everyone in this room is living and dying by this waterfall right here, right? You start the year, you have these subscriptions with customers. You want to keep all that money on the table, but some of them churn. People were just talking about churn. Some of them just downsell on you. They say, yeah, I don't need as much, or I want the same for less. What we really want to be doing is expanding them, cross-selling them, right? So we want to minimize the loss in the front, maximize on the back. So we need organizations that are optimized to drive this, what you're looking at. And we need it now. So what are these customer-centric organizations going to do? Well, we have a general philosophy at TSIA. Growing ARR, annual recurring revenue, right, is a data-driven process, not a heroic act. Can I get an amen on that? Historically in tech, selling products was a heroic act, right? Salesperson goes out, gets that big check, rings the bell, we're all happy. It's different now. And what these customer-centric organizations are trying to do is create the proverbial win-win. You're the supplier. You have a great product. Okay, great. What do you want? You want your customers to move from low adoption to high adoption to what we call effective adoption, which means they're really draining, getting out all the business value you promised them. And the beautiful thing is, if that happens, for you, what are you going to get? A renewal, expansion. But the customer wins, they're going to get their business outcomes. So this is what we're trying to accomplish. Now, how do we do that? At TSIA, we talk about the layer model. You start with landing, customer gets on the platform, okay, that's great. But now the heavy lifting starts, the process and the data to drive adoption. You heard it on the stage here earlier, the analytics, predictive analytics, right? Really understanding. Who's working on this? Customer success. The new piece on the chessboard. And why is it new? Because once again, historically, we didn't really have to worry about adoption, but now we do. So everybody in the room here, we're all standing up, whether you're in a legacy company or out, born in the cloud, we have to have this thing called customer success. And if they do their job, what happens? The customer expands, and when it comes to the renewal, it's not a sales event, right? It's a process. So the layer model, land, adopt, expand, renew. This is what we need to optimize. Now it's interesting, we do a lot of benchmarking in this area. Right now in the technology industry, only 25% of the companies we benchmark are using data analytics to predict churn. Low. Even less are using analytics to predict where their expansion opportunities are. These need to be common practices. We're not there yet. Now, I just talked about this layer model, but I can assure you, none of your customers walk in on Monday morning and say, hey, last week, I just got landed by company ABC, and I can't wait till they expand me this week, right? I mean, that's not the language for your customers. This is internal. For customers, you want to talk about what we call the PMO model. Plan, implement, monitor, optimize. Sitting down with your customers, planning what's the customer trying to do, what's the business outcome, what's the value here. All right, let's implement a plan. What are you going to do, customer? What are we going to do? And then, unlike historically, we're actually going to monitor, are they making progress? Are they using the right features? Are they freaking logging in? And when they're not, we're going to optimize. We're going to course adjust. And this is a virtuous cycle that just goes on and on and on. Now, when we look in the industry, there are a lot of net new organizational capabilities that technology companies now need, which they just don't have the muscles yet. So Mitt was talking about his model, and when we think about organizational capabilities, it's the same thing. Do you have the right processes? Do you have the right skills, the right technology? Are you tracking the right KPIs? That makes up an organizational capability. And there's a lot of things around adoption monitoring and building success plans and success science, understanding what helps a customer really get there. We just don't have those muscles. We're building them right now. But I want to put on the table, it's not just customer success that is working on these new capabilities. We do a lot of benchmarking of standard support portfolios. And what we've seen just in the last 3 years is these premium support services, check these out. Typically, technical support, what the value proposition was keeping things up and running, right? And the big move was from reactive technical support to proactive technical support. Fix it before it breaks kind of thing. But now we are seeing more and more support organizations put these types of what we call operational services on the table. Services designed to help your customer with complexity in the environment, right? IT complexity. Almost like managed services. And we are seeing support organizations put on the table adoption services. So their portfolio is shifting. So lots of pockets and companies now are working on standing up capabilities, right, to be more customer-centric and to really drive adoption because everyone's realizing this is where the puck is going. So when it comes to what these companies do, we are literally pivoting the conversation with customers, pivoting the value proposition. We're going from an old story of, hey, we're here to keep things up and running, to a story of adoption and business outcomes. We're in a relationship because I'm helping you achieve these business outcomes. We're going from stories of more features. Hey, we have these new features. You got to install them. You got to buy them. I don't even know if you're using the stuff I sold you last year, but you got to buy this new stuff this year. Now we're talking about impact features. What are the features this particular customer really needs? I'll tell you a story. SAP, we've known them for years. And one of their executives told me, that if you were an SAP customer years ago and you had a bunch of products, they would send you, I don't remember if it was monthly or quarterly, the product updates that were now available in your environment. Do people remember these? I see people shaking their heads. Yeah, it's like a telephone book, right? You're a customer. What are you going to do with that? So now they've pivoted and they say, look, what we do is we look at the customer environment. We look at the impact features. What are the features that that type of customer really should be using? And that's what we put on the table. We all need to be doing that. And every company I ever talked to, you have these big customers, enterprise, SMB, and then these little customers that you really would like partners to take care of, right? So everybody has those three kind of customers. But if you click into any of those categories, enterprise, big customers, there's a spectrum there. Some of these customers are using everything you have really well. They're really effective, getting all the business value. And there's other enterprise customers that are really struggling, right? So think about an adoption class, right? That you would rate the customers within these categories, and you should be running different plays, different coverage models based on where they are in the journey. And then last but not least, I have to say around packaging, in the technology industry, we love to lead with features. Technical features, service features like response time, feature. You have to pivot that over to business impact. There's no doubt about it. Now, how are we going to pay for all this? Anybody struggling with funding and scaling? If your hand's not up, you're lying. You are lying. I got all the money I could need, all the headcount, not a problem. No. This is challenging. And to set this up, let me show you these two indexes. On the top is the TNS 50. This is like a Dow Jones index. We've been tracking this for over 11 years. 50 of the largest technology companies on the planet. The IBMs, the Oracles, the Microsofts, the Ciscos. And when you look at the quarterly snapshot and how they're doing, these companies know how to make money. And why? Because a lot of them still sell a lot of their technology as an asset. And as I mentioned earlier, one of the most profitable business models in the history of business models because of the way we ran that play. But these companies really aren't growing. They're really not growing, even through acquisitions and mergers and all this stuff. And this has been going on for several years now. Now below is another index we track. It's called the TSIA Cloud 40. 40 of the largest publicly traded born in the cloud companies. And what's going on there? These companies are growing, on average double digits. But these companies are not profitable. The majority of these companies are not profitable. This is what the typical business model looks like. They have about 30% of their revenues going into COGS. They're now spending over 30% on sales and marketing. Some are spending up to 52% on sales and marketing. A lot of money on G&A, a lot of money on R&D. Bottom line, not profitable. Not profitable. So what are some of the dynamics here? Well, we benchmark customer success organizations, their funding models. And what we find is when people typically stand up customer success, whether you're born in the cloud or you're pivoting over to the cloud, they typically basically say, this is just a cost of doing business. It's cost of doing business. So you carve it out of COGS, right, the subscription COGS, or you start to carve it out of sales and marketing. But we're doing the math, folks. And this model is problematic. I can't tell you how many SaaS companies I benchmarked, still private, and they basically look like this. We call it a 90-10 model. 90% of their revenue comes from this magical thing called subscription, and they put the customer success in there, and they put all this stuff in there, and 10% of revenue might come from a little bit of consulting, training, maybe a little bit of premium customer success. That model, that dog will not hunt on profitability. I hate to tell you that. And scale does not solve this problem. From 50 million to 100 million to 500 million, that thing stays unprofitable. Did I scare you now? Sorry about that. What's the answer? You have to diversify the economic engine. Customer success should be funded. Customer-centric activities should be funded Yes, you can carve some of it out of COGS, some out of sales and marketing, and you have to monetize. You have to monetize. And right now, the organizations we benchmark, 49% of them are monetizing. It's almost a common practice. So if you're back there and you're arm wrestling with salespeople that are telling you there's no way we can charge for this stuff, they're wrong. They're dead wrong. The data tells us that. And our strong point of view on this is that these business models are going to have to move from these 90-10 to like a 60-40. 60% from the core subscription, 40% from other value-add activities that you're monetizing, and we know these models are profitable. Let me give you just another visual view of that. I submit to everybody in this room, you're selling technology, 4 ways you can make money. Sell it as an asset, and there's still customers who want to buy it that way. Sell it as a technology subscription. Then you can wrap annuity services, premium support, premium customer success, managed service contracts. Last but not least, you can do project-based work with them, projects on consulting, education, et cetera. 4 ways we make money. And we benchmark this. We know exactly what the margin profiles look on these 4 revenue streams. And are they different? Yes. But each one of them brings revenue and margin into the business model. And so if we just look at a pure SaaS type model, instead of this 90-10, which I was discussing, what we are seeing is that companies are diversifying their engine. And by the time they get to these 60-40 models, they're profitable. And I'm talking real GAAP profits, not this non-GAAP, crap. Real money. Okay? That's how we're going to fund it. We have to diversify. Now, what are these organizations going to look like? You just heard a great panel discussion, sort of debating, how's this stuff all unfold, and the relationship between sales and services. It's great debate right now. Every year, we benchmark organizational structures. And in fact, we do this survey out to the general public. It's open right now. You're more than welcome to go to the TSIA website and participate. But it's interesting, about 2 years ago, it became true that over 50% of the respondents said they now have a customer success organization. So that is a common practice. So this morning, you're talking about 5 years ago starting this and trying to convince people what this thing is. I mean, you're there, baby. You've landed, okay? You are a common practice in the tech industry, which is great. But we are seeing a lot of stress on the way tech companies are structured. Ineffective sales investments. Hey, I need more revenue. What do? You go hire some more salespeople, right? That play ain't working like it used to work. Portfolio proliferation. What do I mean by that? I showed you that support service portfolio and how it's creeping into adoption and managed services. A lot of those companies also have a customer success organization. They have maybe a brand new managed service organization. So everybody's running around creating all these offers, right? And you're confusing the crap out of your customers. Who do I talk to? Who do I buy from? I've got competing offers from the same company. I'm very confused here. We have to laugh because otherwise we cry, right? Those are the 2 options on this. General cost of sales for the company is getting higher. And there's still this adoption gap. We've got these pockets of investments. We're trying things, but we're still not closing the adoption gap. So lots of stress. We think that ultimately, the traditional tech org structures get blown up in a significant way. And to set that up, I just want to comment. We get this question all the time at TSIA. People say, hey, in today's technology marketplace, how do you make money? How do you make money? And we're very prescriptive here. 3 things, just 3 things you have to do. Number 1, you have to embrace as-a-service offers. It's very clear that's where the revenue's flowing. Right? That's where the game's going to be played for revenue. Those offers need to hang on business outcomes, not feature functionality, not technical capability, not the speeds and feeds we used to sell to. Because feature functionality rapidly commoditizes in these as-a-service markets. I've seen it. You have to have a value proposition that's higher than that. So what are the outcomes we are going to influence for our customer? And last but not least, and something that everybody, incumbents or born in the cloud, are struggling with, is you need a go-to-market model that cost effectively cost effectively drives adoption, expansion, and renewal. And that's where we're falling down right now. So what changes? The blurring of service and sales roles. You heard this conversation up here about the trusted advisor and what do we do? And traditionally in tech, there's been this really thick line, really we could call it a wall, between sales and services, right? Hey, you want to talk money, you got to sign a deal, sales, right? Services person says, oh, I don't want to touch that, I'm here to help, I'm the trusted advisor. That's going to blur. Breakdown of the traditional P&L structures. We have a support structure, a consulting P&L. Maybe now we have a customer success P&L. We have the core product P&L. You're going to see a lot of this blur. It's getting in our way. Obviously, a new focus on adoption, and now people are realizing cost-effective expansion. It's not enough just to nail adoption. You heard this morning when people were talking about the bots. We're a big fan of the bots. You need to leverage software to eat labor. You have to. So rubber meets the road. What do one of these organizations look like? It starts with well-funded marketing. If you look at sales and marketing dollars historically in tech, you take that bucket, most of that money went to sales and a little went to marketing. We think there's going to be a rebalancing there. Marketing has to cost effectively do the education at scale. Then you need sales to carry that person across the goal line, get them on the platform. Now they're on your platform. Great. You have a customer success manager. And per the conversation we just heard, what's their responsibility? The initial move has been to say they focus on adoption. We feel that's under-leveraged. We feel that you can absolutely leverage a customer success organization to manage the commercials on renewals at certain dollar levels. They absolutely should be thinking about expansion. All three need to be in play to get the economics right. I know I probably just, again, scared a lot of people in the room here. For complex renewals, you have the renewal specialist. You just heard that on the panel. You may also have a small expand specialist really focused on the smaller microtransactions using data, using process to unlock that in those accounts. And then if the customers, they're adopting, they're renewing, little expansion, they may raise their hand and say, hey, I love you guys, I really want to double down, then you're probably going to bring a salesperson back. This model, I can assure you, is not the historical tech model, period. And let me ask this question. In this model, who owns the customer? Because I can tell you in tech, historically, I ask a tech company, who owns the customer? What's the answer? Sales. You guys all know the answer. I own the customer, right? I sold them, and then they need expansion. I'm going to do that, and I'm walking the halls, and blah, blah, blah. Who owns the customer in this model? Is it marketing, who's spending all this time building a relationship and nurturing? At some point, them at one point. Then it's sales, customer success, and they go back to sales. The process, the customer engagement process owns the customer. Now let's click up and look at the organizational structure. So once again, it starts with marketing, well-funded, driving, the gold for marketing now, MQLs. Marketing qualified leads. That is the currency that marketing departments are going to live and die by. Not just a cool website, not just great brochures, not a really awesome tagline for the product, MQLs. Go over to sales. We believe that a lot of sales organizations are going to become more vertical. Why? You have to speak the language on business outcomes. Most common way to structure sales in tech, geographic. Right? I'm in a geography, I sell all the products to all these different types of customers. You're going to have to be more specialized. Now the customers on the platform, where do they go? We call it the customer growth organization. What's in there? Customer success, right? Segmented by large complex down to automation, smaller. Then what happened to all these PS and support and education and TAMs and all these other folks that engage with the customer? They got to be there. You're going to need those resources. We're going to collapse those P&Ls to a common organization so we can get more flexibility on how we're delivering. You need a dedicated analytics capability to drive this data-driven process. How many of you have dedicated analytics team right now? Not enough hands are up. Not enough hands are up. Table stakes. You don't have it, you're handicapped. You can't get these models to work. You're going to need a team focused on infrastructure, this customer enablement infrastructure. What's this? We've written about this in the books. This is the bots again, right? These software capabilities that are enabling marketing, enabling customer success, enabling sales, enabling your partners. And our philosophy is the objects, right, your software capabilities eat resource in the organizations. You can't solve this with labor and get the economics correct. So this is what we think the future's going to look like. Is this how tech looks like today? No. But we see people moving pockets of this. It's going to take us a little while. But we are pretty convinced if we try to hold with the old models, you can't get there with the economics. So what did I put on the table here in this accelerated MBA class? Why now? The economics. Lack of adoption kills. We have no choice but become customer-centric. What are they going to do? It's about process, data-driven process, driving cost-effectively adoption, expansion, and renewal. How are we going to fund it? You have to monetize. 90-10 will not hunt. You got to think about 60-40. And what will they look like? I just showed you sort of rubber meets the road plus organizational structure, what they're going to look like. And it's interesting, sometimes when I talk about these land and grow teams, and you heard that on the panel, that's what a group did, right? They separated out land and grow. A lot of times people say, well, isn't that just like, you know, the hunters and the farmers? No. No. Hunting in the old day was a salesperson with a Rolodex, knocking on doors, convincing that customer to write the big check. Hunting now needs to be data-driven, marketing, and sales. And growing was a salesperson would walk the halls, take the customer out to golf. Oh, you're going to do an RFP. Oh, I'm going to go work on that and farm that, right? That was the old model. This is about data-driven process and analytics really helping the customer succeed. These are different models. So I hope you had a good day today. I'm excited because I think that we now are heading right to drinks. So everybody should be motivated and enjoy tomorrow as well. Thank you.